Welcome to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. It's the last Thursday of the month, and that means it's time for the monthly RIA strategy update. And Chris Englebert of Beirne Wealth Consulting, he's here with me at Nasdaq HQ. Thank you for joining us, as always. We've kind of got a lot to cover for a month of September that really wasn't as ugly as it was predicted to be.
Absolutely. Yeah, we've typically August, September, October are the weakest months historically in the stock market. Big surprise, September was not. So we'll have to see what happens in October.
All right, and we'll get to that. But let's pull up our first chart. We're going to take a look at the S&P 500. And as you can see, that pattern is continuing of that grind to the upside.
Yeah, absolutely. It's been relentless this year. Literally almost no pullbacks. It's a little scary. We're getting to be kind of in a parabolic situation, which is a little worrisome. And I want to point out a couple of levels that investors really have to focus on. 2420 is really important support short term. That's about a 3 to 4% pullback. 2240 is a real strong uptrend line. That would be about a 9 to 10% pullback. Now, I just want to make a comment. Last month, we talked about the fact that if the S&P finishes where it is right now, it would be 8 positive quarters in a row. Very unprecedented, so it'll be very interesting to see what happens in October.
Well, not even from a chart perspective, but a fundamental perspective, the overhang with Korea and the lack of policy and legislation that's being pushed through Washington. You would think that there would be more uncertainty in the market, and here we are trading over 2,500.
Absolutely. No fear whatsoever, which is very, very unusual.
Right. It almost feels as if the market is underpricing what could potentially happen out of Korea. Will anything go through tax reform? Healthcare is essentially DOA, right? So really, what are the next catalysts? Going into Q4, we have earnings that we can discuss, but even, that's been relatively muted. And then, of course, maybe we'll get some volatility back in the market in December with the rate hike, but that's anyone's guess. But let's continue to focus on December here as we take a look at the Nasdaq Composite, basically a mirror image chart. So if we look at chart number 2, we can also see that same sort of trend.
Yeah, Nasdaq is starting to show a few cracks. I mean, it hasn't made a new all-time high like the S&P 500. It's telling us that there's some leadership change coming possibly, and we're going to be talking about some of the leaders in a minute. But really, the big trade this year was the FANG stocks. It either looks like investors are starting to take some of that money off the table or trying to dial back a little bit as far as their risk goes. So again, the Nasdaq was the powerhouse leading up into the month of September, but it looks like there's some leadership changing hands.
All right, and let's talk about leadership as we look at chart number 3, the Russell 2000. Now, it's interesting, the IWM, which is the ETF that mirrors the Russell, it was up 10% yesterday.
Yeah,
that's quite a move.
Yeah, big move in the Russell. I mean, the small mid-cap stocks had been lagging all year, and all of a sudden they turned on a dime in the month of September. So we don't know if that's because of potential tax reform, lowering capital gains, et cetera, but it looks like that underpricing in the small mid-cap area was shattered with a vengeance, and we had new highs. In fact, what a lot of us were looking at and were concerned about was the fact that not all aspects of the market were participating, and you got the small caps turning it on big time.
All right, and if we take a look at chart number 4, we see one of Apple. Now, that's had quite a move for this year, as have a lot of the NASDAQ heavyweights, and it'll be really interesting to see how the Apple iPhone 8 and the X play out in terms of the cycle.
Yeah, absolutely. Now, we don't give recommendations on individual security positions, but we put this up here so you can see what, obviously is a major part of the NASDAQ. And we just want to show that the Apple's had a history of rallying into product releases and then kind of exhaling afterwards. We're watching, for example, the 118 to 120 support area. Apple's had a really kind of a sharp sell-off in the last week, which surprised a lot of investors. And it is a cause for concern that when the selling happens, it happens rather fast and furious. So we're trying to have investors take a look at and understand that Apple's obviously a major part of the NASDAQ. So.
All right, and let's wrap it up with the 5th chart, chart number 5. Look at the Treasury index. Now, this looks a little bit different than what we see on the equity side.
Yeah, absolutely. I mean, the theme last fall was that we were going to have this big pro-growth agenda and that rates were going to go up. And in fact, what's been happening is rates have actually been steadily trickling downward throughout the year. We had the risk trade go on when everybody was scared about missiles firing from Korea. But you can see short term there's been a backup in rates. It looked like we were going lower. I want to point out, though, that the rates for the year hit a high in July when all the equity indexes were hitting a high in July. Now we've got equity indexes hitting a high again, and although rates have come back up, they haven't come back to as much of a degree as what they did back in July when the equity markets were going higher. So, whether or not it's showing a potential slowdown in the economy next year, or the fact that maybe the Treasury buying back mortgage-backed securities is finally having an effect is still a little bit tough to tell, but we're still of the opinion that rates stay rather stable, if not trend lower in the near term.
All right, let's talk about sector rotation if we can. Let's put up chart number 1 again of the S&P 500, because I think rotation is really why we're seeing that grind of those 2 to 3 point ranges in the S&P, perhaps moving out of the FANG names, looking at energy, which has been beaten up all year, right? Or even the financials for that matter. If we get that rate hike in December, it should translate into something better for the financial sector.
Yeah, the biggest surprise has been the energy sector in the month of September, one of the best, if not the best performing sector. The E&P companies really turned it on. There were some individual stocks there that had huge moves, probably from the standpoint that they were really undervalued with the sell-off that we've seen in energy all year long. And the fact is, energy prices are also grinding higher as well. So there's almost kind of a correlation, the fact that energy, crude oil is floating higher, and it begets the fact that the S&P 500 is grinding higher with some changes in the name. So we don't, we're still a fan of energy at this point in time. We don't think you overweight it, but you got to start looking at it, because we interview a lot of professional money management firms, and one in particular was very bullish on the energy sector going into 2018.
Well, speaking of sectors that have been beaten down, it's no surprise that retail is one of them.
Correct.
Going into Q4, we have holiday 2017, which is where a bulk of their sales come from. It's interesting, you really haven't seen much rotation into those names. Of course, you have the Amazon effect, and consumer spend trends are down a bit, but what do you think there? Do you think it's worth picking at some of these names, or we haven't hit the trough yet?
Yeah, it's one of the things that happens is obviously the mutual fund industry has their year end, September 30th, and they've been getting rid of a lot of these names. If you're an adept trader or you're looking for value, there is some value in the retail space. You may see some mergers because of the beaten down prices going on there, but it's still a sector we're a little bit leery of. We're worried about the consumer. We've seen gasoline prices go up 50, 60 cents a gallon, which is going to hurt the consumer when it comes to Christmas spending. The question is how much. But I think amongst the rubble of the retail, you're going to find some companies that have value. And in fact, from a M&A standpoint, there's already been some names floated around that could be M&A candidates before the end of the year because they're that cheap.
It would be interesting to see if department stores get some private equity activity as well, right?
Yep,
I mean, what else really can you do besides restructure some of those? I also think that retail, it's always the story of the have and the have-nots. I mean, discounters are one of the haves for sure, like your Ross stores, your TJ Maxx, and so forth. So that's one area that continues to thrive, as well as those that have a really strong online presence. But I think we're going to continue to see that sector rotation going into the end of the year, because every dip is continuing to be bought, right? Is there really a reason to sell at this point? And it's hard to identify those new levels for a buy, because things are pretty fully valued here.
Right, yeah, absolutely. And that has us concerned. That's been our theme this year. We had high valuations last year. The valuations have done nothing but get higher. So the real question is how do you control risk in a portfolio?
Exactly. What are you having your clients do go into the end of the year?
We're trimming, and it's one of those things where we have this conversation all the time with clients where they're like, well, gee, if we just held on. I'm like, well, you have to understand we've had 2 years, 8 positive consecutive quarters of return. We're concerned that you may see some adjustment in investment behavior when you finally do get a down market. I mean, we just haven't seen that kind of sell-off, and I believe that people don't really know what they're going to do. So you could end up seeing air pockets when stocks sell off or indices sell off, i.e. like what's been happening with Apple. But so far, those air pockets have been a good time to buy. The question is, at some point, the game of musical chairs ends.
Are a lot of your clients asking to incorporate options into their portfolios as a way to possibly derive income in this low interest rate environment, or to potentially hedge on either a heavy tech or just heavy S&P portfolio in general?
Yeah, it's funny you say that, because we did have a client with a concentrated position in Apple, and we put together a trade there, which was basically sell the December 155 calls by the December 125 puts. He was nervous at the time when Apple was floating up through the 155 strike price, and I told him, I said, there's a lot of time left for this trade, and we can see where obviously the price is right now of Apple. So.
All right. Well, let's look forward a bit and talk about where your wheelhouse is, RIA strategy update. And this is and my question to you is, as a registered investment advisor, you're going to have conversations that are not the most pleasant to have.
Yep.
Clearly, you're involved with estate planning. Clearly, you think about how much money you will need as people live longer, right? Will they have enough money to support their needs? How do you have those conversations? How do you plan ahead? Because it's not just someone who's later in life. It's also, as soon as you start having kids, you need to think about these conversations that are not easy to have.
Oh, absolutely. And I think the number one, if I can say one thing to anybody, especially adult children, is that they've got to have a conversation with their adult parents. I mean, too many times there's taboos growing up. Mom and dad didn't talk about money, but I think those taboos are breaking down. As people live longer, the number one concern of adult children is, do my parents have enough money? And when I get them in a room and I have the parents and the adult children, and I bring this subject up, you start seeing the heads nod from the adult children.
I just had the conversation 2 years ago. I know.
Right, and it's something you've got to talk about. I mean, there's no question about it. There's a lot of estate planning strategies that have to be implemented, and if people don't talk about them, then they can't take advantage of them.
What happens if you haven't taken advantage of it and you're in your early 50s, later 50s, and so forth? Is it too late? There's still something that you can do?
Oh, absolutely. Yeah, absolutely. I mean, the one thing that we see quite a bit, we do a big defined contribution business, is we see a lot of people forgetting their 401ks. They leave one job and they move to another, and I call them orphan 401ks. And there's some strategies or reasons why.
So they don't take that chunk and continue to invest it, or they just leave it in cash?
They leave it invested, but they don't roll it over to an IRA. And sometimes you're limited as far as your beneficiary options with a 401k versus an IRA. And we're seeing a lot of people beginning to ask questions about, well, now my money's in an IRA. What can I do with it? What can I do with, as far as my children goes? There's some neat things out there. We just mentioned it the other day in a group setting. Somebody can do a backdoor Roth IRA, and people say, well, what's that? Well, if you convert from an IRA to a Roth IRA, there are no limits to do the conversion. The cool thing about it is that you can name, obviously, like grandchildren as beneficiaries, and when you pass away, those grandchildren basically have a Roth IRA forever. So the numbers can be stunning when you run through them, but again, you've got to have these conversations, because if you don't, there's a lot of missed opportunities. One of the other areas that we see that's coming on is adult children that inherit IRAs. So when you're over 70 and a half, you got to take your required minimum distribution. And what happens is, obviously, when that parent dies, the child then has to take that required minimum distribution. And a lot of adult children are like, hey, I don't want to have to take it because it's going to throw me into a higher tax bracket. There are ways to do it, upping your 401k contribution and doing some other strategies to try and help. Believe it or not, it's one of the fastest accelerating problems that we're seeing out there.
You manage a lot of municipality money, or do you find that people are, in fact, working longer?
Oh, absolutely, without question. In fact,
and how does it? Yeah, and that would impact their pension distribution as well.
Absolutely. Right? I hate to say it, but 75 is the new 65. I mean,
that's a good thing.
It's amazing how people are starting to look, and it's health reasons too. And the question is that going to create a pension crunch? Well, it is and it isn't, from the standpoint that if you're getting a defined benefit plan, you may wait until later in life to take that. But the problem is, if you wait until you're 73, 74, 75, actuarially, and I make fun of my actuary friends all the time, you're probably only going to live to 84, 85 years old. So you may not be collecting that defined benefit pension as long as you think you are. But again, we're seeing a lot of people, they're in good health, they're in their early 70s, and they're like, why shouldn't I keep on working? And we're like, you're absolutely right.
Oh God, I'll be doing this. I'll be on camera for another 30 years. So if you don't retire, you can't access any of those funds.
If you're an active employee, you can still make contributions to your 401k.
But you can't with your pension.
Correct. You can't access your pension plan funds until you officially terminate and retire, is what you can't do.
I can't decide what's better. If I'm healthy and I'm young and I'm active and I want to keep my brain fresh.
Right.
I don't. Yeah, I guess it's a tough question that people have to tackle.
Yeah, but these are conversations that again, parents have to have with their adult children, because the adult children are like, hey, mom, dad, how long are you going to work for? Are you going to retire? What are you going to do? How's it going to impact your lifestyle? The other conversation we have quite a bit is talking about the real estate. We're seeing a lot of people looking to downsize. I mean, the old adage 25, 30 years ago was that you had a starter house and you had an intermediate house and you had that big house. Now people are going the other way, and they're going the other way rapidly. And the real question that we get is, okay, I've got these proceeds from the sale of my house. What do I do with them? How do I invest them? And those are conversations we're having all the time right now.
All right. Well, it was great having you for the month of September. And, oh, there's Friday the 13th in the month of October.
Yes, indeed.
That should be really interesting.
Could be very scary, or it could be just fun.
There you go. Trick or treat. There you
That's
go.
it,
Well, thank you very much for joining us. And traders, as always, and RIAs and FAs, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.